The crypto market has crashed. Bitcoin is down around 70% from its all-time high. Ethereum is down closer to 80%, and many cryptocurrency platforms are collapsing. They're laying off their employees, freezing withdrawals of their users' money, and are having to be bailed out. And if you bought Bitcoin anytime in the last 1.5 years, you're now underwater on your investments. So let's talk about why crypto is crashing. Because what I've noticed is that most people invested in crypto, and most people in general, to be honest, don't read financial news on a regular basis. So they aren't too aware of how the state of the economy right now is contributing to the falling crypto prices. They tend to point the finger at things like the collapse of Terra Luna for why crypto is dropping, but really it's a lot deeper than that. I would say the reasons for the crypto crash fall under three main categories. There's the macroeconomic factors, things happening to our broader economy. Then there's the crypto specific factors, which are all of the bad things that have happened recently to certain coins and companies in the crypto space. And then there's one more overarching reason that I want to give my thoughts on. And this is something that a lot of YouTubers and financial news journalists tend to forget about when talking about why crypto prices are falling. And just so you guys know, it might sound like I'm super anti-crypto because I'm going to be talking about the reasons why the crypto market has crashed, but I'm actually pretty neutral on crypto overall. I'm not the kind of person to recommend you invest all that you have into crypto.
Take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. Go mortgage your house and buy Bitcoin with it.
But I'm also not so skeptical to believe that all crypto is a scam or a waste of money.
There are actually elements of what we call a pyramid scheme in Bitcoin.
There is no actual value being created by Bitcoin. You can only make the money that other people lose. That's the nature of a Ponzi or a pyramid.
So I'm not really biased on either side. I'm just simply giving you my thoughts on the crypto crash. But before we get into that, make sure you like the video. It would really help out my small channel. So first of all, let's talk about the macroeconomic factors at play right now and how they have caused the crypto market to sell off. The US economy has really been going through it since the beginning of 2022. GDP was negative during the first quarter of 2022. GDP is a measure of how productive our economy is, and it's really the best indicator of the overall health of the economy. So if GDP is negative, that's pretty bad because it means our economy has shrunk. And now, many people and economists are predicting that GDP is also going to be negative during the second quarter of this year. And if that's the case, that will mean that we are officially in a recession. That's the definition of a recession, 2 consecutive quarters of negative GDP. And right now, we're halfway there. And the reason why the economy is doing so badly starts with the pandemic. Remember when the Fed decided to print 40% of the total US dollars ever created in just 12 months? Well, yeah, it turns out that wasn't a good thing. Yes, it got people through the pandemic, but it replaced one issue with another issue. Because of all this money that was created out of thin air, we are now experiencing high inflation, and all of us have really been affected by this. Everything has gotten very expensive. Most young people can't afford to buy a home anymore. Gas costs $5 a gallon. Used cars has almost turned into an investment because of how much they've increased in price, and the only thing we can count on during this time of high inflation is Costco's $1.50 hot dog combo. That's right, despite all of this inflation, Costco still hasn't raised the price of its hot dogs. And if they ever do, then I'll be 100% certain that we're headed for a recession. But in all seriousness, inflation at the rates we've been experiencing is really bad for our economy. And so for the last few months, the Fed has been attempting to undo the inflation problem that they've created by now raising interest rates, which works to lower inflation. But unfortunately, raising interest rates also negatively affects economic growth. Companies no longer have access to cheap money and can't grow as fast. People have less money to spend on goods and services. It causes investors to sell off their riskier assets like stocks and crypto, and move their money into safer assets like bonds and cash. There are also other economic factors like Russia's invasion of Ukraine that have caused a pullback from riskier assets like crypto. But I would say that inflation and interest rate hikes are the main reasons. And if I lost you at any point talking about these economic forces, I'll explain why the health of our economy has caused crypto prices to fall in simpler terms. When the economy is doing bad, you don't want to have your money in risky things like crypto. You want your money to be safe, so you sell your risky crypto investments and put your money into safer investments like bonds. And when a lot of people do this, it causes the price of crypto to go down. So moving on to the next big reason for the crash in crypto. I'm talking about the crypto-specific factors now. As it turns out, many companies and coins in the crypto space were not able to survive when crypto prices fell substantially. Terra USD, which is an algorithmic stablecoin, completely collapsed, going from $1 to less than 1 cent. And the cryptocurrency it was tied to, Luna, also collapsed, causing YouTubers like KSI to go from having $2.8 million in Luna to less than $1,000. But judging by how funny he found losing $2.8 million, I'm pretty sure he's okay. The crypto platform Celsius also came into trouble and stopped all of its 500,000 members from being able to withdraw their funds, citing extreme market conditions as the reason for freezing withdrawals. And now no one has any idea if they're ever going to be able to get their money out of Celsius or not. Not to mention Coinbase, which is the largest cryptocurrency exchange, recently announced that they would be laying off approximately 18% of its workforce amid the global downturn in cryptocurrency. So these are the main events that have all contributed to crypto's downfall. The broader economic reasons started the crash, and these crypto-specific events made the crash even more severe. Now I wanted to share my thoughts on what I think the overarching reason for why crypto is experiencing bear market. And to put it bluntly, crypto was in a bubble, along with basically everything else. But I think the crypto bubble was especially bubbly. The hype around crypto over the past 2 years has been ridiculous. Thousands of different crypto projects have been created in a short period of time, and most of which don't have any kind of plan to bring genuine value to the world whatsoever. Crypto took the world by storm. I swear we all have that one friend or relative that didn't know anything about investing until about a year ago, where out of nowhere, they started claiming to be a crypto expert. Like suddenly I had relatives I hadn't spoken to in years, calling me and telling me they can invest my money and make me millions. I mean, the last time I had spoken to them, they were a sophomore in high school, and now somehow they're a crypto hedge fund manager, I guess? Meanwhile, rappers and influencers started shilling shady crypto altcoins to their fans. 13-year-olds were making TikToks about the next altcoin that's guaranteed to 100x in price. Elon Musk was repeatedly tweeting about Dogecoin, and meme coins were reaching market caps in the billions of dollars. All of this hype contributed to crypto prices rising, and attracted everyday good people that were not experienced investors to pile in their own money because they wanted to also make money like their friends had been. And as a result, we saw the price of Bitcoin rise from around $5,000 in March of 2020 to $69,000 in November of 2021. So that's over a 10x gain in less than 2 years. And when you consider that the real world application and usefulness of most cryptos hasn't really changed drastically over the last 2 years, I think the insane rise in crypto prices was just too much, too soon. But you know that saying that history always repeats itself? Well, the rise and fall of crypto over the last few years is remarkably similar to what happened to tech stocks during the dot-com crash in the year 2000. In the late 90s, tech stocks were all of the rage. The internet was new and no one really knew what the internet could turn into, but they knew that there was huge potential there. Thousands of tech companies started to pop up out of nowhere to try and just jump on this new trend. Everyone wanted to start a tech company because all of the companies were receiving insane valuations since investors figured that the internet had so much potential to make money. I remember my finance professor in college saying that companies that literally had no business being involved in tech would add .com to their company name and rebrand themselves as a tech company, and that would attract a ton of interest from investors. Well, after a few years, tech stock valuations finally hit their peak in March of 2000, and then it all came crashing down. The Nasdaq, which is a stock index that's heavily weighted towards tech companies, lost 78% of its value. Even tech unicorns like Amazon lost 95% of its value. Cisco, which was the most valuable company in the world at that time with a market cap of over $500 billion, lost 80% of its value. And even today, over 20 years later, Cisco's stock price isn't as high as it was. Overall, the vast majority of internet-related companies created in the 90s ended up amounting to nothing. And I think there's so many parallels between what happened in the dot-com crash and what's happening today in crypto. Just like how thousands of tech companies popped up because money was flowing into the industry, thousands of cryptos were created in the last 2 years. And just like how companies would add a .com to their name to attract investment from venture capital funds, companies and influencers have been taking something that has no real reason to be associated with the blockchain and making it into an NFT, which has attracted a lot more money into whatever they've been doing. And just like how investors piled their money into tech companies because they believed it was the future, people and even larger institutional investors over the last 2 years have piled their money into crypto. And they were right, by the way. Tech companies obviously were the future, just like how there is some potential, although I would say more speculative, for crypto to be useful in the future. But I think it's important to understand that just because a tech company or a crypto coin has potential doesn't mean that an asset is justified in increasing in value by thousands of % in a short period of time. Crypto can have real-world application that brings value to society and still be in a bubble, which is what I believe has been the case for the last 2 years. I've said this before when crypto was hitting all-time highs, and I'll say it again now when crypto is down 70%. Crypto is a speculative investment. Even if you believe that various cryptocurrencies have the ability to change the world of money, transactions, ownership, whatever it may be, it's still a highly volatile speculative asset. And no one truly knows with certainty what's going to happen to crypto or a particular cryptocurrency in the future. So here's my advice about whether you should invest in crypto, from someone that is pretty neutral in crypto. I think there's enough of a use case for various cryptos and enough smart people involved in this space to justify having a small amount of your investment portfolio in crypto. Crypto definitely shouldn't be the only thing you invest your money into. You should invest the majority of your money into non-speculative assets that have a long history of creating wealth, like stocks and real estate. But yes, you can diversify by investing investing a little into crypto, as long as it's with money that you have no problem with losing. This is the approach that I'm taking, and this way, if crypto amounts to what some crypto enthusiasts think it will become, then you won't miss out on making some money. And on the other hand, if it turns out to be a massive scam, then you won't wreck yourself financially. One thing we can be sure of, though, is that most cryptos will amount to nothing, just like what happened to most tech stocks that were created in the 90s. So I would stick to just investing in the top cryptos like Bitcoin and Ethereum, and avoid coins like Doge Elon Mars. And I know this is a bit of a controversial topic, so let me know your thoughts and if you agree with me or disagree or whatever in the comments below.